the real reason why they were up, because it wasn't earnings, and AMC APE, as well as other meme stocks. What's up, everybody? It's good to see you. Diaz, Grandpa Barney, Phoenix, Paul. Welcome, everyone. We're going to get straight to it because I've only got about 15 minutes here before I've got to go pick up my kids from school. And the fact of the matter is this. APE, as you can see, full disclosure, I have 10,000 shares of APE. APE is up to 283 right now. My average cost on APE is at around $2.96. We had a really, really nice day on APE, up about 10.16%. AMC, got about 6,000 shares of AMC in this particular account. My averages are around $9. I don't know what this is down here for. To be honest with you, you can't even see that anyway. But anyway, it's currently at $5.97. It's up 4.55% on the day. In after hours, they both closed up pretty nice. It was pretty healthy movements on both stocks. You can see here's the movement from yesterday. And it's been a pretty good movement over the last week. It's up quite a good amount. I think around 47% over the last week. Everybody, Bookman, Richard, Rob, it's good to see you guys and ladies. But anyway, let's move straight on. Let's see. Today is February 2nd. And using the Ortex data, we can see that the live short interest percentage earlier today was 22.77%. That was down about 0.23%, as 1.31 million shares were returned in an effort to bring down the cost to borrow. As you can see, they failed miserably. The AMC average cost to borrow today is over 600%. And this was earlier this morning. It is now around 650%. So it's gone off 50% in half the day. The maximum cost to borrow is 855% so far. And again, that was earlier today. So let's take a look at the more recent numbers. This was yesterday, February 1st. The average cost to borrow was $398. Maximum was $515. And the short interest was at 23.02. Taking a look earlier today, the short interest at 22.77. AMC average cost to borrow is over 600%, and the maximum is at 855. Taking a look at the most recent data, this is what we currently have right now for AMC. And we're looking at 22.77% as 1.3 million shares were returned. Almost 500,000 were borrowed for 1.8 million returned shares. 1.8 million returned shares just to try to keep this, the shorts to roll their positions, to be able to cover their positions, is not working out so well. Grandpa Barney says, pick up the kids' gas money. You're too funny, man. Thank you so much for your support, Grandpa Barney. You're something else, brother. Truly. Thank you. So that average is now 644.72%, a maximum of 905.41%. As you guys can see from earlier today, that's gone up very, very quickly. And the minimum is at 7.26%. A lot of people have asked me, why is the minimum so low? Well, they only have to borrow one share at that minimum price for it to be down at that level, or, a handful of shares. But if literally one share is borrowed at 7.26%, then that makes that the minimum. Same thing with the maximum being 905%. It could have been a few shares, could have been a few hundred, don't know. But the fact of the matter is that it likely was a lot more shares borrowed around here than there was down here, because the average is 644.72%, and that's what we need to really keep an eye on. Keep an eye on what's going on there. And that's Ortex data. So if you take a look at Webull, on Webull, you can take a look at the cost to borrow, and that is 674.33% as of 3:55 Eastern time today, February 3rd. 675% there on that hard to borrow on Webull. Then also here you can see it on my account. There are 0 shares left to borrow, and the current fee rate, the cost to borrow for IBKR is 285.17% with 0 shares available of AMC right now. And currently down at about $5.91. It's been moved down a little bit in the after hours. I'm sure these guys would love to get AMC back to $5.50 by tomorrow, because the max pain for tomorrow is $5.50. Whether that happens or not, I don't know, but we're going to definitely be looking into that. Now, moving on. Some of you guys may have heard about Adani Group. Hindenburg Research on January 24th put out this phenomenal due diligence. It is absolutely massive. Like, I mean massive. I think it's about 50 or 60 threads long. It's one thread with like 50 or 60 different posts on it. I read the entire thing. Like as you can see, like I liked every single one of them as I went through and I read them so I could keep my place. 7 out of X, 8 out of X. They didn't even know how many they were going to do. And when I read this, I was like, wow, I would really like to short this company. But I decided not to because they don't trade on the NYSE. So I'm not going to go chasing companies in India and stuff. However, that doesn't mean that big institutions and big money is not going to trade Adani Group. And this is directly linked, in my opinion, to the current situation with Facebook/Meta. Hindenburg Research said, Adani Group, how the world's third richest man is pulling the largest con in corporate history. And I was absolutely not shocked or appalled in any way because this is exactly what we've been seeing for a long time. Amicorp established investment funds for the key 1MDB perpetrators that were simply a way to wash clients' money through what looked like the mutual fund, according to the book Billion Dollar Whale, which reported on the scandal. This is their 31st post. And you guys have heard me do videos here on this channel about the 1MDB scandal several times, and we went into that in great depth. So let's not go into that too much right now. If you guys would like to, you can find that on the channel on YouTube. But the fact of the matter is that I was blown away by the fact that all they're doing is laundering money, laundering vast amounts of money. They set up an investment fund structure for Malaysian fund 1MDB, and the first transaction for $100 million went from a BSI account controlled by 1MDB into an Amicorp administered mutual fund in Curacao. But it wasn't a usual mutual fund. This enterprise emerging market fund took cash from multiple investors and masked one major difference from a plain vanilla mutual fund. It comprised segregated portfolios that took cash from only one client before investing into another asset, washing a client's money through what looked to be a mutual fund. And you can see this was exactly what happened to the $100 million which Enterprise Emerging Market Fund promptly sent to a shell company controlled by Eric Fatt, Lowe's associate. And you guys have, John Tack Lowe, you guys have heard me do videos about him and the fact that he's currently on the run, and he's been on the run for, nearly a decade from that scandal. And what happened was their stock just absolutely plummeted. Their stock just took a dive. You can see here, Adani shares fall as short seller firm Hindenburg announces their short position. They said, after extensive research, we've taken a short position in Adani Group companies, to U.S. traded bonds and non-Indian traded derivative instruments. Shares of Adani affiliated companies fell after the short seller firm accused the conglomerate of corporate fraud. Adani Group called Hindenburg's report malicious combination of selective misinformation, but it's not. I read it for myself. I believe everything that was going on there was, in fact, a lot of fraud. Those are my allegations out of all the details that I've seen so far from this phenomenal due diligence done by Hindenburg Research. And whether they took short positions on it or not, it doesn't really matter. I applauded them. I told them thank you very much in the comments below. I appreciate you guys posting this, and you deserve to make a shitload of money off of this for pointing out these crimes, because it is a disgusting amount of criminality that's going on with that stock. And this is literally the guy, the third richest man in the world. But anyways, moving on. That was a few days ago. So far, I think they've lost over 50% in their stock. And Citigroup has now stopped accepting securities of Gautam Adani's group of companies as collateral for margin loans, ladies and gentlemen. So there are tens of billions, if not hundreds of billions of dollars in this company that was invested in by the world's largest hedge funds, short hedge funds, and other investment firms, family offices, etc., that is no longer valid collateral for Citigroup and for many others, and many other is the banks and prime brokers. So these hedge funds have had to look elsewhere. Adani Group lost $50 billion in just 2 days due to that Hindenburg report. And are you going to tell me that that's coincidence with what's going on with Meta? Absolutely not. Right now, they're going to say that a Q4 revenue beat of $32.17 billion versus the $31.65 billion expected is a reason for that. They're saying that an advertising revenue of 31.25 instead of the 30.86 that were expected was a reason for them to beat to beat earnings and be up 25% today, adding billions and billions of dollars to their market cap. Absolutely not. Look at the EPS, though. The adjusted earnings per share are 1.76 actual versus 2.26 expected. So the adjusted earnings per share are down almost 52 cents versus the expectations. And you're going to tell me their advertising revenue, the Q4 revenue, was a beat when their real things that really matter, like adjusted earnings per share, are going to be down nearly 20%. Their active users is almost exactly as expected. Their apps daily active users is 2.96 billion compared to the expected 2.92. And their operating loss is still was $4.28 billion losses actual versus the $3.99 billion expected. Am I to believe that they lost $290 million more than expected, and their earnings per share were down from 2.26 to 1.76? Is a reason for their stock to be up 25%, adding tens of billions of dollars to their market cap? Absolutely not. That's absolute bullshit. The entire reason for Meta to be up is not due to a $40 billion share purchase authorization. It is not due to the fact that their revenue growth was up, because their actual adjusted earnings per share is down. Their Reality Labs operating losses are up. There's no way that a $40 billion cap here is the reason. The $40 billion share repurchase was the reason for them to gain 25% of their stock price today. The entire reason that Facebook was up today, and I am almost completely positive of this, even though I'm not a financial advisor, and you should not take this as financial advice, is because of the fact that Adani Group lost $50 billion in 2 days. That was on January 27th. Since, they've lost another $50 billion off their market cap. And that money that can no longer be used for Citigroup's margin collateral requirements, for ISDA banks, for prime brokers' collateral requirements, has to go somewhere. And it has gone here. Facebook parent company, Meta. At the same time, that is the reason why you're seeing squeezes on meme stocks and the S&P 500. The S&P 500 is not up simply because of Facebook, even though that did have quite a bit to do with it. But it's all the other meme stocks that were up in positive territory to a grander scale. Let's take a quick look and see what the percentage change for today was. I've got about 2 minutes left before I've got to go, but I just want to run through this with everybody. Genius Group, up 30% almost as of right now. Meta was up 22%. Again, because that money from Adani Group, hundreds of billions of dollars, had to go somewhere. And it's gone into Meta. It is one of Citadel Securities' top holdings. Their number one holding, or number two holding, if I recall. GTII, Global Tech Industries, another meme stock, up 19.6%. Beyond Meat, 17.8% gains. Affirm Holdings, 16%. BBBY, 15.25% gains. Upstart, Harley Davidson, DWAC, APE, Grayscale Future of Finance even, Snapchat, Mullen, TQQQ, the Ultra Pro Triple Q is up 7.25%. BBIG, remember, and the Nasdaq's was up 3.25% today, mainly due to Facebook and Meta, I should say. Whereas the S&P is up heavily due to meme stocks like AMC and COS and Splash Beverage Group, etc., running up so greatly. Look at even Funware. You know, some of these companies like Express, AMC is even up, it is at a flat $6 today. And for today, Max Payne is supposed to be $5.50. I wouldn't be surprised if Max Payne for tomorrow was $6. And that's why it's already at $6 at this very moment. I wouldn't be surprised in the slightest. It's funny though, the S&P 500 is up 1.47%. The Nasdaq's up 3.23%, but the VIX, the volatility index, is up also at $18.70, which is almost a 5% increase on the day. How in the world could the VIX run with the S&P? Well, ladies and gentlemen, that's because the S&P's volatility isn't coming from its losing value. It's coming from the mad amount of volatility occurring within it on these meme stocks like AMC and BBBY and so on. And on that note, I think it's quite simple to see that this is one of many reasons that due to Adani Group losing their ability to act as collateral for ISDA banks and prime brokers for hedge funds and family offices and other institutions, well, they've had to go somewhere else. So they moved their money into Facebook/Meta in order to prevent further margin calls on companies like AMC, APE, GTII, GNS, BBBY, APE, etc., DWAC. That's why, as an investor, one of over 4 million investors in AMC and APE, need I say more? Need I say more? We're going to be so motherfucking rich, ladies and gentlemen. That's how I truly feel. And that being said, I'd like to note that Dave Lauer said, a quote, "Why the fuck not?" when he found out that the proposed rule by the SEC 1101B is not designed to eliminate order handling conflicts of interest and does not ban conflicted transactions. Because a broker-dealer engaging conflicted transactions with retail customers has an incentive to handle those in a manner that prioritizes its own interests over its customers' interests, said the Securities Exchange Commission. So I can understand why Dave Lauer is fucking pissed. So I went ahead and pulled it up. The order competition rule here specifically is a big problem. And I will post a link to this in the comments as soon as we're done here. I've got about 1 minute left. I got to go. This is a huge issue. And everyone needs to comment on this. Everybody. People think that their opinion and what they say doesn't matter and that they're already going to institute these things. No, you're wrong. It does matter. The more people that speak up about this, the better. Because what's stopping market makers like Virtue and Citadel for paying more for these auctioned orders in order to run retail's trades through the OTC and prevent proper stock price discovery, as they've been doing for years with payment for order flow? Nothing stops them. Nothing stops them from doing that at this very moment. So as you can see here, the order competition rule 3496495, the comments are due by March 31st, 2023. People need to send a comment and say, why are broker dealers being prevented from sending their orders directly to lit markets? I don't want my order auctioned to Citadel or Virtue for them to pay more than the NYSE. They could easily pay more than the NYSE because they're going to front run the trades anyway. And they can make up that small loss by paying more with further profits. People need to comment on this order competition rule here. Submit comments on this link. It is the second one from the top as of this very moment. And say, I do not want my orders being sent by Virtue and Citadel to the OTC. Because they don't get sent to dark pools. They get traded over the counter. Okay, ladies and gentlemen? And when they're traded over the counter, that means they're traded in the dark. It goes from JP Morgan's desk to Citadel's desk. And from Citadel's desk to, let's say Citigroup's desk. And from Citigroup, it goes to Virtue's desk, etc. And then so on and so on. So I'm going to leave this video here. I'd like to say, I wish you peace and wealth, everybody. We're going to be so motherfucking rich. This cost to borrow is going absolutely insane. It was at... Shit, what the hell was it at? It's at 644% now, which is absolute insanity. This was at 600 earlier today when I took the picture, and it is now at 644% average cost to borrow, 905% maximum cost to borrow, with 22.77% short interest, reported short interest. I can only imagine what the actual short interest is when you take into account all the shorts marked as long, the rehypothecations, the married and divorced puts, and so on. The ISDA contracts and swaps and futures that are going on these stocks is absolutely massive. So I wish you peace and wealth. Have a great day, everybody. Go to the link in the comments here after the video and comment against the order competition rule. It only takes 2 minutes, literally. Thank you, everybody. Have a great fucking day. Thank you, everybody. Have a